May profits be upon you. This is RT Money representing Lions Den Effects, and I'm welcoming you back to my YouTube channel. We're going to take a good look at gold. All right, let's see what we can see. The first thing is we are bullish. All right, I say we're bullish, man. I'm bullish on this. We made quite a big push to the upside before this correction, right? All right, and it was just a correction. Now, what do we got going on here? Huh? What we have going on there is a move back to the upside. This might be the resumption of the bullish trend. It may be. What we want to do is just read what's in front of us, right? So why am I saying that? Well, let me get something to write with. All right. First, we got the pullback, okay, and then the push. Here's the deal. Here's the deal on this here. All right, we created a zone of demand here, and as we come down, make that low, pull back, then make another low, pull back, right? What we want to notice, what you want to notice is the low here was broken by this new one, right? As soon as that happens, as soon as this happens, all right, you want to go to where, what was responsible for this low? Where's the highest point, all right? The highest point was here. When this was made, you go to the high of that candle, all right? If there was another one, like if this one was higher, then you would go to the high of this one. As long as the other ones behind it led to that low, that's the one I go to, all right? And we broke this high to the upside, letting us know that price is turning bullish, okay? Price is turning bullish here. This is a change of character on this time frame, right? What do you expect after a break of any kind of market structure? You expect a pullback, a return to impulse, all right? Where would the impulse come from? Well, right here. This is the impulse. This is the originating impulse down here. This whole thing is a bullish order block, right? We can come all the way down here, but we can refine it down to this area here, all right? And you can see price came right to it, right to it. That's why I always emphasize these wicks as zones of supply and demand, all right? This is the refinement of the larger order block. All right. So as price comes into here, you see, we become bullish. And then what do? All right. We take out this swing high. We take out this swing high. All right. And what are we doing while we're doing that? Taking liquidity. All right. Price is building liquidity, and then coming back and taking it out. Right. So here we are up here, okay? This is a lovely impulse, a very minor, shallow pullback, a minor correction, and then higher. So I'm studying the nature of that, all right? Studying the nature of this, that pullback here, and I'm going to take a closer look. What did we create here? A zone of demand. You see how price moved bullishly and moved aggressively out of this zone, right? So it leaves behind it a zone of demand, and price then comes back and mitigates that zone. Are we going to continue up higher from here? I don't know. I'm not in the predicting business. What I am in is the reacting business, okay? So I'm going to be prepared for whichever way this price goes, all right? First, because I'm bullish on this pair, I'm looking at this as we break structure to the upside, I'm looking at this as a possible pullback, the return to impulse. I believe this is a shallow impulse. I do. And I think there's a chance that we may go a little lower than here. And I'm going to look for the unmitigated zone of demand for price to come to. All right. But let's talk about the bullish the bullish option first. All right. If price continues bullishly from here, just understand that this will be a zone, I mean, a liquidity that it wants to take. And as soon as I see that there's a high to target for liquidity, all right, because why would I look at that as a zone, as a liquidity target? Because it didn't make a new low. It didn't break the lows that created it. So it becomes a weak high. And weak highs are targeted for liquidity. It's that simple. Okay. So as I believe price will target this high, sorry. As I believe price will target this high, I'm looking at, well, I'm trying to make sure I understand what is it trying to accomplish as it targets that high. What is the real mission? So I'm coming all the way over here and I'm looking for an unmitigated zone of demand, I mean, of supply, an opposing zone of supply. So I'm looking at that area right there. And I'm looking at this candle right here, this inside candle. And I'm always thinking that the inside candles, sorry, I will take the high of this candle here. That inside candles are zones of supply and demand. Okay. So this area is marked. All right. I like this area. Why? Because there is an imbalance leading up into it. So it's an imbalance zone of supply, and there is liquidity generated for it to collect on the way up. This would let me to believe that the mission is to mitigate this zone. All right, with that criteria. Okay, if we come up here, we'll see if price does our dance for us. A break of a high made, a swing low, a higher high, and a break of that swing low, and we come up for the RTI, or the return to impulse, return to origin, and we could take shorts from there if price gives us that pattern. We'll see what happens once we get up here. Now, that's the bullish option, all right? If price decides it wants to dance here and come back down further, aha, all right, we're going to target this low. Why? Because it didn't make a new high, of course. All right, that makes it a weak low. All right, and weak lows are targeted for liquidity. All right, and these lows would come under scrutiny. You understand? All right. Now I would refine this low down to this portion, the unmitigated portion of this zone of demand. All right, and we'll see what happens when price reaches that. All right, but if price does penetrate it, all right, I'm looking at the what do you call it? I'm doing a lot of stuttering. I'm looking at the reaction, of course, the reaction to this zone here. All right, I'm looking at the reaction to the zone. If we come down, and we have a reaction here, pull back, and we break through, I'm waiting for that pullback so I can take the short here. All right, I'm looking at the extreme of the most recent reaction to take a short from. You understand? And I will be targeting the lows down to here. All right, this zone of demand. Let me get rid of that. I'll be targeting this zone of demand. And that's far off. Okay. Understand that I realize that. All right. There is a sell to buy here, a sell to buy area here. And I would definitely look at this as a decisional area that price could definitely bounce off of. Okay. If we go down to the 15, we don't need to go down to 15. We can go down to the, you can see it clearly here. Aha, we have near equal lows here. This zone has been penetrated already. So I'm not really feeling that as much anymore, to be honest with you, as a zone where it could possibly turn around. But yeah, I'm just gonna go with what we got going on here. If it breaks it past this low, I'm not so sure this one survives, to be honest with you. Let's see what that looks like on the 2-hour. We got something going on here. I'm not gonna give up on this one too quick. Yeah, I'm gonna mark this. Okay. Let's see if I can just get this right. We can mark that here as a possible POI, here. All right. So we have our plan for the one up above. If price continues up from this area, all right, we're going to take out that high. We're going to fill in the sorry. We're going to take out this high. We're going to fill in that zone of you know, the imbalance. I'm sorry. If I can just get my buttons right, I'll be okay. We're going to fill in that zone and mitigate that that zone of supply. That's if it goes up top. If it comes down and wants to fill in this wick, all right, because we already see that this zone here of demand has already been mitigated. So if it does come down, I believe it's going to reach that low. All right, and we're going to come down into the low portion, the unmitigated portion of this opposing demand. Okay, if we make it past this, then I'm looking for, like I told you before, I'm looking for the reaction that after it breaks through and comes back, I'm looking for that short right there. Okay, that's what I'm doing. Okay, that's what I'm doing. What are you doing? Hey, thank you for sharing a few minutes of your time on the Sunday before the open. The markets will be opening up in about 45 minutes. All right. Make sure you check out the 2 videos that I have on your screen right now. All right. Make sure you tap that like button if you want to see more free content. And don't forget to like and subscribe. I'll see you in the next video.